Okay, stock is 208.5. What is the expected move here, folks? Michael, what's 55? Okay. Okay, Randy. Pretty close to being in your camp. Joe. Okay, anybody else? Expected move in Apple? Okay, so right around $9 in Apple. Okay, I'm going to bring a chart in here in a moment. So we're looking at an expected range in Apple of 199.25 up to 217.75. Okay, anything of note in here? 199.25, 217.75. I don't see a lot technically at either end of that range there. There certainly is some resistance at, right here around 215, just because that is the recent high that we saw in May. In terms of support, kind of hard to really think of any kind of support here, guys, before we get to the 50-day moving average. And the 50-day, just based on this chart, is not even so much support. However, if you look right here, those two pieces of resistance, that really coincides with the 50-day here. Gary, we're looking for support and resistance are near the expected move areas. Sorry, I'm listening to President Trump talk about the Fed and bash the Fed here. All right. 175 is definitely support. I'm looking at something that, nearer to the moves, the expected moves here. So perhaps around 195, definitely 175. I mean, if the report is bad and the stock gets all the way down to 175, or market's going to have more problems than that. Okay, so not a ton of technical, not much technical support resistance at these levels. And, when I look at this chart, I mean, it's hard overall just in general not to be bullish Apple, right? Because it's Apple. But when I look at this chart for a trade, there's nothing I see here that makes me want to take a trade into earnings, long or short, bullish or bearish. I would look at a double calendar or a strangle swap or an iron condor, which are, the non-directional type of trades. So let's take a look at that. Okay, so based on these moves of around, 200 up to 218 basically. Okay. The 202.5, 197.5, and 215, 220 iron condor is trading right now about 2.25. So besides that being, way too low for us, break even, not so bad. On the upside, or on the downside, excuse me, is 200.25. On the upside, 217.25. So that's not so bad. However, the 2.25 reward to risk wise is only 0.82 to 1. If we could get 235 to 240, I'm in. This iron condor, not so much. Now, what I would like to look at is a strangle swap here. Okay, so let's look at that. Right around the expected move ranges. So probably the 200 strike, maybe even a little lower, and the 217.5. Well, Tony, we just evaluated an iron condor, and the reward to risk at these current prices does not meet our criteria. So now I'm looking at a strangle swap, which will all depend on volatility and what's going on there. Does that make sense? Okay, cool. So let's look at the 200 and we can go to even 220, that's fine. Okay, this one is about $1. Yeah, it's about fair value. When I say fair value, if we pay $1, that's the reward to risk on it, at least based on our projections with our volatilities. Probably not something I'd want to do. Let's see if we widen out these strikes a little bit here. Just want to see what that would do here. Should make it a little less expensive, and it does, so it makes it about 85 cents. This isn't so bad, guys. Earnings are after the close today. Nice job, Hank, on Zoom. Love to see that. Nicely done. This isn't so bad. If we wanted to look at both sides, okay, we certainly need a move, right? The worst thing that could happen is for the stock to stand still. But this is not bad in terms of a strangle swap. So this is the, let me put this up here. 195, 220 strangle swap is very interesting. Now, with a strangle swap, which is just a double calendar, right? Calendar call spread, calendar put spread. What is the most important thing? Two criteria, two things that we need to happen. And as soon as we get done with this, I want to look at Facebook. Charlie Moon just put out a buy signal in Facebook, so I want to look at that and see what he sees. But what are the two most important criteria for this to be successful for us? Okay, Gary says stock must move. Yeah, that's one of them. We want the stock to move towards one of the two strikes. We don't care if it's up or down. We definitely want it to move one of the two strikes. What else? Okay, David, I'll go with that. What else? Yeah, so IV is the big thing. So we want to make sure that our projection in volatility, exactly, Barry, Randy, you got it. So we want to make sure that our projection for volatility here is not over projected. And that's why I'm always conservative in our volatility projections. So two things. We want the stock to move. We want it to move towards one of our strikes. And we want, obviously, our volatility assumption, our volatility projection to be in line. I think our vols are looking pretty good here. I like this a lot, actually. We don't do strangle swaps often. I like this a lot. Now, I don't want to put this out yet, just like yesterday with Beyond and, you know, a stock that may move quite a bit during the day today. Though I would doubt that Apple's going to move that much during the day today ahead of earnings. But this is one that I want to absolutely keep in our pocket for a potential signal later on today. Okay, so we will reevaluate later in the day, but I like this a lot. Okay, any questions on that? Kishore, we're not doing anything with Vive. Nothing right now. Hank, this is the 1 week strangle swap. August 2nd, August 9th. Okay. And let me put in here about 85 cents-ish. I do, Hank. I absolutely do. However, the longer we go out in time, the less accurate probably our volatility assumptions are going to be. Lots of times we look at 2 or 3 week strangle swaps. Apple, I don't really want to do that because of, there's probably more volatility sensitivities, more volatility variances. All right. Cool. Let me get this the recording posted up here. I'll be right back, and we are going to be moving on.